So thank you so much for being here. Today, we're going to have a new user-focused live help session, and then we'll take questions across the board. If you are a more experienced user, feel free to, have a little snack or early dinner for 10 minutes or so, or 15 minutes, and then you can get all your questions answered after that. And for the newer users, welcome. Thank you for joining TradeMachine. Let's get started. We're going to do disclaimers like usual. This is not a solicitation to buy or sell any security. This is not advice. You should read the characteristics and risk of standardized options. The results here are provided for general information purposes as a convenience to the viewers. The materials are not a substitute for obtaining professional advice from a qualified person, firm, or corporation. Trading futures and options involves the risk of loss. Please consider carefully whether futures or options are appropriate to your financial situation. Only risk capital should be used when trading futures or options. Investors could lose more than their initial investment. Past results are not necessarily indicative of future results. The risk of loss in trading can be substantial. Carefully consider the inherent risks of such investment in light of your financial condition. So I'm Jason Hitchings. I'm the CTO at Capital Market Labs and the architect of TradeMachine, and been in this business for quite a while. So we're going to focus on today just kind of a high-level picture of what it is to use TradeMachine, what the power of the tool is all about, look at what backtesting is. We're going to spend some time on the Today tab, which is the first place to log in. We're going to look at when you click a link and you get all the share links, what is that doing within the tool, setting technicals, adding your own custom alerts, looking at earnings, and then quickly just mentioning community and the Learn tab. Okay, so for anyone who hasn't seen it, we're going to just start off with this what is backtesting video.
John got great news. He just bought a new house and he's in a whole new neighborhood. Now that he's all moved in, he realized he has to figure out the best way to get to the grocery store. Little did John know, his quest for the best grocery route was about to offer him insights into something much bigger, much like the world of stock trading. On his first trip, he figured the fastest way to get there would be a straight line, and he tried that way first. Pretty confident he was all set, but it turns out that way has a 10-mile-per-hour limit, and even worse, it's a speed trap. His 10-minute drive turned into a 20-minute problem. So then John tried the next shortest route. After all, you can't get unlucky twice, right? He went west, and then he went north. This will work, he thought. And that was a really good route. He was all set. But later in the week, he faced a new challenge. A school at the corner meant unpredictable traffic patterns during weekdays, much like unforeseen market fluctuations. And that meant every Monday through Friday, both early in the morning when school started or in the afternoon when school got out, this was just as bad as the slow speed trap. This route worked once, but when conditions changed, it didn't work at all. So then John thought he would take the path that went north and then west, and that would be the way he got to the grocery store. He could just take this route every time and not worry about changing conditions or days of the week. Well, that route worked fabulously well on the weekdays, but John soon discovered that on the weekends, this route had massive traffic jams. Months later, anyone watching John could see why he was so happy. He knew which route to take, on which day, and what time to get to the grocery store. Now he gets to the grocery store easily, now that he has a plan that is based on his experience in the past, his failures, and his successes. Ultimately, John reached his goal when he learned from history. It took a lot of drives to the grocery store for John to figure it out, but now he's happy. Now he knows exactly how to get to the grocery store, and exactly when and exactly which roads not to take. But in reality, there's many homes, and there's many grocery stores, and they're all over. And it's not just grocery stores, it's every other store, and his friends' houses, and work. And there are many paths to take, many times, on different days, in different seasons, in different weather. Figuring out what route to take, on which day, and at which time, then also understanding which routes not to take, and which places not to go on certain days and times, well, this is all called a backtest. John used the past to help him decide what to do in the future, to get from his house to the grocery store. Imagine for a moment these everyday destinations, homes, grocery stores, workplaces, as stocks in the market. And instead of roads, think of these routes as different ways a stock can move. Just like John's routes, the stock market has many paths. A stock can be above the 200-day moving average, or below the 200-day moving average. It can be above the 200-day moving average, but below the 50-day moving average, but above the 10-day moving average, all at the same time. Stocks, much like roads, have their ups and downs. They can be on an upward trend or experiencing a downturn, affected by seasons, market events, and earnings reports. There are hundreds of millions of different patterns in the stock market for just a single stock, and there are tens of thousands of stocks in the market, each moving together and separately At the same time, just as choosing the wrong road at the wrong time can lead to delays, choosing the wrong stock at the wrong time can lead to financial setbacks. So, how do you navigate this complex network? Enter TradeMachine, your financial GPS. It's a backtester designed to identify the most promising patterns. It tests hundreds of millions of different opportunities and patterns and shows you historically which ones did the best. And then we layer on our proprietary artificial intelligence on top of it. Our proprietary AI goes a step further. It doesn't just learn from historical patterns, it anticipates adapting to new market conditions. A bit like John's evolving understanding of his neighborhood's traffic flows. Because when it all comes down to it, while option trading can be very complex, all we really want to know is how to get from home to the bank.
Okay, great. So yeah, we are simulating everything happening in the market as closely as we can, earnings and, all the stock movement, everything we can possibly pack in there. We're looking at really millions of different combinations. And from those things, we're testing different strategies, different combinations of options, different technicals, and we're trying to find patterns for things that have edge in the market and that are outperforming, that the reward is bigger than the risk. And we're testing millions and millions of things. We're finding patterns, and some of them are pretty profoundly effective. And that's the essence of TradeMachine. Everything else is built on top of that. And then we're surfacing things that happened recently and showing you those on the Today tab or sending you alerts to your phone or text. Everything is built on that market simulator in the background. Just going to make a quick note about success with a tool that really does have edge. For any tool that actually, one of the rare things out there, if the tool is helping people be successful traders, what does it take in order to really maximize how you leverage that? Because let's say this thing was producing, let's say you won exactly the same amount as you lost, or you even won more than you lost every single time you took a trade, and you won 60% of the time. How would you really know if you have a successful track record? And there's really no other way to do it than to write down your trades and to write down when you're going to exit. All of the conditions that we put for when you enter and when you exit, we've simulated millions of different back tests in order to try to find the optimal combination, whether it's stops and limits or earnings events. So if you want to deviate from those, that's awesome, and you absolutely should. We highly suggest that you back test a whole bunch of different scenarios to make sure that you're getting something that's optimal. But you write it down, it takes the emotion out, and it helps you see what's winning, what's not winning. And then take 10 trades, 15 trades, and do it over a span of time. If the market's up or the market's down 1 week, you're going to think you're doing great or doing terribly. And try a couple different strategies, and you'll start to see a track record. And then you can figure out the things that are working. And then, my personal view is you start small. And then when you find a strategy that's working, you reinvest into that strategy. You can kind of de-risk it by reinvesting your earnings rather than, digging deeper into your savings. And then from that, you can start to build a successful portfolio and a successful trading career. It's just a quick example of the spreadsheet that I use to track, trades in the past few months. Just when you enter, when you exit, and just tracking. It doesn't have to be hard. Great. Okay, so when you first log into TradeMachine, you see the Today tab. It looks like just a bunch of boxes with some percent returns and some wins and losses. There's a huge amount of power all wrapped up in this screen, because in order to get here, and I'll pull this one up. Amanda, can you just verify that you're seeing the TradeMachine, my live version now? Yes. Want to make sure I was sharing the right screen. Okay. So when you log into TradeMachine, this is what you see. And I'll add this little zoomed out. So I'll zoom in a little bit here. So each one of these is a separately back-tested strategy that uses a different combination of earnings events, of technical conditions, and of the actual options that you're trading. And they've been optimized for what stops and limits, the days to expiration for the trade, if it's simply a call or a call spread or a put spread, or if it's using a diagonal across different timelines. So we've run hundreds of thousands of different combinations for each one of these strategies to try to find the optimal combination. And we've tested so many strategies, 30 or 40 different strategies that didn't have edge, that we just never included in the product because they weren't helping. They weren't going to help anyone. So the strategies that are here, for something to show up on this screen, it needs to have a winning track record over multiple time frames, like 1 year, 2 year, 3 year, 5 year. It needs to have an average trade return that's solidly positive. It's a little different for each individual strategy. It needs to have a total trade return that's positive. And it needs to have more than just a single win. It needs to have a decent track record of trades with more wins and losses. And so this is a very highly curated list of trades that are being presented. And each one of these strategies has a different philosophy, a different reason that it's there, different set of market conditions that causes it to trigger, and many times different actual securities that are being traded, different options, different months, different combinations of calls and puts. For any one of these, there's a little question mark. If you click the question mark, you're going to get either an article or a video walkthrough. Oftentimes the video walkthrough is right inside the page. When you click it, you're going to see a detailed breakdown of what the strategy is, why we created it, how it compares to the market as a whole, how it compares to just like if you're buying a call, hey, look, if you just bought a call for this big basket of stocks, how would it have done? If you buy it using this technical setup and these other triggers, look how much better it does. So we can actually kind of walk you through the process that we used in order to come up with these. So each one of these has a little breakdown, and you can sort, with these symbols if you'd like to, or by returns. This trigger shows you when it triggered. Generally, if you want to follow the backtester as closely as possible, you would only look at the ones that have traded today, but the other ones are sort of for reference, but you can certainly look at those and consider entering those as well if you chose to. Additionally, anything that has this orange AI symbol attached to it means that in addition to all of the other criteria that we've mentioned, we've also passed it through a screening layer of our artificial intelligence. That artificial intelligence used a large language model in order to find, to test, many, many different scenarios and to come up with an algorithm that would help identify more edge, more chance of winning, more likelihood of winning and winning both more and more often based off of how stock moves, how it jumps up and down, and also if it tends to move up during those jumps or down during those months, during those jumps. So the statistical term for those are skew and kurtosis, but there's a lot more into it than just the pure skew and kurtosis because we've done a lot of things to make that data useful. So the ones that have a little AI symbol by it mean not only is it active, but the skew and kurtosis data, meaning the performance of skew and kurtosis over the past 6 months or a year, are also favorable. So it's a little extra signal, a little extra indicator that this is a strong position, strong signal, and ready to jump into. So for anything that's blue means it triggered today, then you can click on one that triggered today. This one, the AI is also favorable for this one. And you can see the skew and kurtosis settings here. This little green bar, when I click that link here, it pulls up the back test. It pulls up the market simulation. So this is using a put spread. For this ticker, there's technical conditions set. I'll go into those more. It's being this particular strategy, this fade the dip, is short a 40 delta and long the 30 delta puts, meaning you're short the put spread because the 40 delta, basically the options market is saying there's a 40% chance that the stock reaches this price by expiration. And this one has a 30% chance of reaching this second strike by expiration. That's a shorthand way of thinking about what delta means. It's what the options market, what the math of these options is saying, how likely it is that something's going to be met, that a certain option is going to end in the money. We have a lot more great information on delta, but all of that information is packed into this back test, and we'll go into a little bit more detail in a second. But this little green flag also says that the technical conditions that caused this to show up in the Today tab not only were true early in the day, but they're actually true right now as well. And so when you look at the technical conditions here, they're printed here, and you can read them that way. You can also scroll down. It says open trade when, and there's a couple special models here, the squeeze and the mammoth. You can read about those. But the technical open allows you to kind of customize the technicals. You can use what we have. You can customize your own. But these are all of the conditions that are being met. And that little green flag says these are all true. It says the stock crossed up through the 200-day moving average. The stock is above the 10-day exponential moving average, that the 20-day RSI is below 70, meaning it's not overbought. And additionally, that these AI characteristics are also active as well. You don't have to worry too much about these. Basically, it says the asymmetry, if it's above 0, it means it goes up more often than it goes down. And the tailedness means how big the jumps are. So the higher it is, the bigger the tail is. But we've set these up in a way that they work well. So these are our own proprietary technicals. You can play with them if you want to, but anytime they're set, you can feel confident that we set them to a level that makes sense. Okay, so you can log into this screen anytime you want to, and you can filter these and say, look, I only want to look at tickers that are in the largest 500 by market cap, pretty close to the S&P 500. Or you can say, I only want to look at tickers where the option prices are tight. I like things that are very tradable, that there's, there might be a dime between the bid and the ask, then you can say the best. If you're okay to have markets a little wider, 50 cents wide, etc., then you can start coming down here a little bit. 3+ is a pretty good benchmark. There's more you can read about the exact details of all of these things. So if you go to 3+, it narrows down the selection. And now when you click on one, you're going to know that you're not going to see some stock that's $1 at $5 or, 0 at 250. It's going to filter out a lot of that noise of stocks that are less liquid. Okay, so looking at these different positions, I will draw your attention to the fact that you can also, if you don't want to just log in all the time, if there's a certain strategy, like let's say you look at buy the dip or the long strangle, if you like that strategy and you want to be notified whenever one of those occurs, you can click Set Today tab alerts, and you can scroll down to any of these that you want to set. So, buy the dip, for instance. So you could say, I want all of them, or you could say, I just want the largest 500 by market cap or the NASDAQ 100, etc. So you can start by just picking a few of the strategies that you're most interested in. And then if you put your email at the top and you click save, now you're going to be emailed when these are triggered on this page so that you don't have to necessarily log in and keep refreshing the page, that you can be notified and just kind of keep an eye on your email. Okay, so I created a quick little cheat sheet here. So this is if I zoom out a little bit, and you can see all of the strategies all in one. There's 14 different strategies. We keep them in the same position. We say that none are triggered yet because it can be confusing if you know that you want to look at, you love the buy the Bollinger buy the dip, for instance. If we just remove this tile altogether, then it's confusing because you're looking for Bollinger buy the dip and you can't find it. So we'll just say, hey, if the technical conditions haven't been true for any symbols here, then we just haven't found any yet today. So these things will stay in the same relative position when you log in. Okay, so I created a little cheat sheet here about what each one of these is, and we're going to include some more information when you click the little question mark. So you can kind of see, so this spread the sell-off is one of the more complicated strategies. It's also very powerful and interesting. It relies on, you should take a credit. You only want to put this on if you can get a credit. And it relies on the fact that the stock is moving downwards, but you're hoping it doesn't move down too much. You're okay with it to move down a little bit. Your profit actually goes up. Then you start giving your profits back and start losing money until you hit your protection. Very frequently, this one might go down. You might show that your position is in the red for a while, even if things are going great, just because of the nature of the trading. If the stock starts to go down to your short options, the short options are going to look more valuable, but you're kind of hoping it doesn't move too much more and that you can eventually pull out a nice win. We have a lot of call diagonals here where you're selling a call more out of the money that expires first, and that helps finance owning a call that's closer to the money. And so if nothing happens, then you can, you basically don't lose anything or even make a little bit of money in the near term. And if the stock moves up, a good amount, you still do well, even if it moves up quite a bit relatively fast. It has to move up quite an extreme amount very, very fast before these would turn, where that would start to really hurt you. So a lot of long call diagonals. These ones that are beginner, I think are all just long calls. You can see in parentheses it says beginner. Here's a short put spread, a long strangle. We're actually going to look at one of these in more detail today. Just a straight long put. So there's a beginner is either a long call or a long put. This bearish burst is a long put. And then we have earnings diagonal, same basic, philosophy as mentioned before about the diagonal. And then these pre-earnings 3-day, 7-day, and 14-day strategies are all long calls over different time frames, and they're based on the fact that oftentimes stocks rally coming into earnings, especially if it's a good, positive earnings season so far. There could be kind of bullish momentum across the board, and also that owning them going to earnings, oftentimes it doesn't cost you as much in terms of the premium in the option because there's so much potential built into the earnings event that if you buy an option after earnings, a lot of the value is retained, and sometimes the implied volatility will actually go up even more. And so sometimes even if the stock doesn't move that much, you can still make a little profit. But these actually sell before the earnings event. We don't wait for the earnings event to happen. We actually take advantage of that bullish momentum and then we get out. These are not earnings bets. And then a short put spread. So you make money if the stock doesn't go down post earnings. And this is based off of stock having relatively not great earnings, but that they're not going to continue going down after that. So they kind of take a bad hit after earnings or a moderate hit, and then kind of the bad news is over, and then the stock starts to rally. So that's based on that phenomenon that oftentimes the bad news comes out, the stock drops, you wait a day or two when you get in, and even if the stock goes sideways, you still make money on that positions. So that's kind of a quick overview of all these different strategies. Okay. So we're going to look at this long strangle. I just noticed that for Salesforce CRM, we just had a trigger on the Today tab. It's not a position that we've talked about so far. You can click the question mark to learn more, and the question mark pulls up the video as mentioned. But when you click that CRM, this is what you get, and I'll just follow along here. So this is this CRM, the Salesforce trade. And then we'll kind of dive down and look at this specific trade. Okay, so it's still active. The trade is to do a long 40 delta call and a long 40 delta put. So these are both slightly out of the money, a call and a put, using an expiration that's roughly 14 days into the future, or as close as we can get to 14 days in the future. So that's the basic strategy. When these technical conditions are met, if you click on it, you can see more details, and you can see every trade that was placed historically. You can even download trades or copy the trades to the clipboard and dive into the detail. But yeah, you can see every trade and when you exited. You exit this position when you scroll down here. So this is a strangle or long. The earnings handling is we do not trade earnings. So if an earnings event happens, we will exit before the earnings, and then we'll wait 2 days after the earnings for the conditions to happen again before we enter. It's a technical open. So when I click the technical open, it says that the stock needs to cross down through the 200-day moving average. So the stock is, moving in a downward trend, and the stock is below the 10-day exponential moving average. And the exponential moving average just means you look at the data, the more recent data, and give it more weight. So it's also kind of in a long term, not doing that great, and in the short term also declining. So that might seem like a stock you wouldn't want to trade, but this is a strangle. And so you do fine if the stock goes up or if it goes down. Okay, so for Platinum members, if you're an annual member, then when you click this show options, it's actually going to show you the trades that it would take right now, the actual strikes and expirations that you would trade in order to put this trade on. And if you're not an annual member, and by the way, if you become an annual member, you actually save 17% over the course of the year. And it also helps us out for how we, rent our servers from Amazon, all that kind of stuff, license our servers. But no problem if you're not an annual member. You can click the show options. You know that you want to be as close to 14 days in the future as possible. 15 days is pretty close. And then from there, we are looking at the call delta. We want as close to 40 delta as we can. And on the put delta, we want as close to 40 delta as we can. So there we have it. So that tells us the position that we're going to put it on.
Jason, since you mentioned annual, I'll just add in that currently the liquidity filter is exclusive to annual. We give annual users access to features in beta while we're still testing them. So if you are an annual user, you get access to things before anybody else.
Yeah, I actually thought of the same thing. Thanks. Yeah, so this liquidity filter on the Today tab, if you don't see it right now, we are going to make some version of it available to all users. Probably just an on-off version, so not quite as much granularity, but at least probably you can just jump straight to the 3+, meaning you'll get rid of the most, illiquid names. But we do release to the Platinum users first because they're our longest lasting users and they give us great feedback and all that kind of stuff. So that was a good thing to mention. Okay. So we pull up this trade. It says that it's active. There's some information on delta here. If you click the what is delta, it's going to give you a nice deep dive on the delta. But the important thing to know is that 50 delta is at the money. The lower the delta for both calls and puts, the further out of the money it is. So calls, as the strike price gets higher, means that stock has to go, say, from 200 to 220 to 230 to 250. That delta will get lower and lower and lower as it goes further and further out of the money. And I think the simplest way to think about it is the chance that option the stock will end up getting to that strike price by expiration. And it's nice because it factors in a lot of things about how much movement, how much volatility the market is assuming is going to be there. I know a lot of people might be used to trading something that's, say, $5 out of the money or something like that. The nice thing about Delta is if you're $5 out of the money and it's closing tomorrow, that's a very different trade than if you're $5 out of the money and it's expiring in 6 months. Delta factors both of those things, wraps it all up in one number. So there's a nice little deep dive on Delta here, as well as if you go to the Learn tab, if you look at the education, this second course, part 2, Delta and implied volatility will go. This is about a 90-minute course on these things. It's completely free to TradeMachine users, and that we'll do a deep dive on these topics. So if you go to Learn tab and go to Education, you can really level up your options knowledge. And so we definitely encourage you to jump in there. Okay, so I typically use the Thinkorswim web front end. A lot of people use Thinkorswim. I find the web front end a little just kind of faster and easier to do simple trades if you're not trying to do real deep analysis. So if you pull up CRM, you click this little options chain icon. Now you want to find the expiration closest to 15 days in the future, or 14 days in the future, which is 15 days. You look down at the delta, you find your 40 delta, and this I did earlier today. So this changed by $5, which strike was the closest. And same thing on this side. You look for the delta. Put deltas are negative just because the way the math works, but you look to the closest 40, when you look at it from like an absolute value perspective. These give you the 2 strikes to trade. And then in the web version, you just click the ask on both, and it will pop up the order ticket. As I mentioned, for annual users, you can save a step and just click the show options. That'll pull up your order ticket. It defaulted to 10. I changed it to 5 contracts each, which gave me is about a $4,000 position. I was fine. It kind of priced it when you did like this complex order book multi-leg strategy. It actually starts it off near the mid-price execution, so I was fine with that. Sometimes with a single leg, oftentimes it'll go for like the asking price and not it'll put a limit order in, but for a pretty bad fill. I clicked review. It said it's going to cost me about $4,000, and I sent the order in, and it just got filled right away. This is a little earlier in the day. The position is actually up a little bit over the course of the day. So then the question becomes, okay, so now I put the position on, but when do I get out? And so when you scroll down in TradeMachine, let's see here if this is the right trade. Let me just pull it back up. So I'm going to click CRM again. Down here, we have the open trade when, and then we have the close trade when. So you can also set a technical close on your strategy. So you can say, hey, if it crosses back down underneath the S&P 500 or these 200-day simple moving average, that's great. This one says if the position is up 20%, then exit. So this one is trying to capture a small win, but it has a high win percent rate. So you're just kind of trying to capture, the stock is down quite a bit. You're just trying to capture a little bit of, the volatility and just take a quick exit. If you go 10 days without making that 10%, then you get out. So those are the conditions that I'm going to exit. So it cost me about $4,000 to put it on. So I'm looking to make about $800 in this position. If I can't do it within 10 days, then I get out. So that would be, I'm looking for these individual strangles to go to about 960. So what I can do is actually just click close selected, and I can set, you have to say, I don't want to set just a day. I want to say good till canceled. So it'll just stick around until I get rid of it. And I can set that to 960. I can click review and send, and all of a sudden, it's saying, okay, you'll take a credit. It lines up with my math at around $4,800. So that's the plan, is to try to make $800 sometime in the next 10 days, if not sooner, on this position. So then the question is, okay, well, how am I going to remember? I mean, I can write it down in my spreadsheet that I need to exit in 10 days, but that's, am I going to have to look over my spreadsheet and check every position every single day? Our goal is to take as much of the work out of this as we can for you. And so you can actually do something on the alerts tab. And so from this screen, you can click alerts. You can enter your ticker. You can say, I want to exit on a specific day. So you can say on a calendar day, and you can just count 10 days into the future and pick the day that you want to exit and say, exit CRM. You can put a phone number in there if you want it to send you a phone number, and then an email, and it'll email you on that date and give you, definitely use the alert because that's going to help you. Also, if you click add alert, instead of up here, if you click add alert from this tab, then what it'll do is it will send you a link to the actual trade. Because if you still want to say probably exit CRM, you'd want to change, instead of saying technicals, you might want to say on a calendar day again and do all that stuff. But now it's going to send you this little share link in your text or email. And when you click it, it's going to pull open the strategy again. So sometimes that's helpful, like little reference point. Great. So then when you add that in there, now it's going to just alert you, 10 trading days. This is trading days, not calendar days. When you're holding a position for a certain number of days, it's going to notify you 10 days in the future that it's time to exit that position. If you end up, it says you're looking for something about 14 days in the future. If there isn't if they don't have weekly options, if there isn't something that's exiting 14 days in the future, if the expiration is 12 days, is say, 9 days or 8 days in the future, just because of the way the trade went on, just factor that in. You give yourself a note to exit the position, or at least to give it a good look, because you don't want to, be exercised if you don't want to be. So just, keep that in mind. The backtester is fine to have it, if it can't find the perfect thing, it'll still choose something 8 days in the future and it'll just exit when it comes to expiration time. Great. So that you'd click this add alert. This bulk update alerts is if you want to change your email address or something like that. Like, let's say you decided you're sending it to the wrong email address. Some people have 1,000 alerts set or something like that. If you click bulk update alerts, then you can change your email or change the phone number, or clear. Let's say you don't want to get text messages anymore. You can clear them here, or you can just say, hey, I actually just love the Today tab. I don't, the alerts I set, or I want to start fresh. I have a new plan, so you can just bulk delete that way. Great. Couple things I'm going to mention, and then we'll go to Q&A, is that when you are on the backtest tab, this is the start date and this is the end date. So this end date shows yesterday until I update it there. So this was showing through the 29th. And the way that the TradeMachine works is that anytime we have a share link, whether it's from the Today tab or whether is if you click this button, so I'll just, as an example, I'll change this to AMD. When I click the share link, all of the information is still captured there. You're going to see the exact same, wins and losses as before. And so in order to do that, we have to keep every single setting exactly the same, because we want you to see this exact backtest with a 49.6% return, or as close to it, as we can get. If we let the end date go forward, for the first week, it might not matter, but 3 years from now, if we're updating this end date automatically, all of a sudden this says, 5 and 2 or 5 and 3, and the returns are totally different. It's quite confusing. So we lock in place every single setting when a share link is clicked. So start date and end date is one of it. If you want to say, how's it done up to today? If you click any one of these buttons up here, it's going to update the date. So you can say, I want to see how it's done in the last 3 years. It's going to update the end date to today. Also, a lot of these strategies have their own settings here. So if you click this little settings button, you can see this is executing at the mid-market, that this is the assumptions we're using for the commissions, 50 cents per contract. And the deltas that we're using, which strikes to use, are this 40 delta for each of the first 2 legs. So if we change this, it will change the backtest. And if we click the share link, it's going to update these settings. So if you were used to seeing these at 50 and 50, when you click the share link and when you open that share link, it's going to update these. So if you're a little confused about why the deltas are set the way they are, simply just click the little share and update these guys to whatever you want. You might constantly see us putting a comma here. If you don't have a comma, it will run all 5 of these so that you can say, do I want to buy something more in the money or more out of the money? This would be a guts, Strangle. This is a straddle. I happen to have the same deltas here. So, and then more and more out of the money. So you can actually test very quickly and to see side by side, okay, which one of these actually performs the best? Like which strike is best? And so looking at this particular strategy, this one's actually done great in terms of the percent return. It's done an 85% return if I use something more out of the money. Interestingly, they've all had 2 wins and 1 loss still. So, if you're on the fence about which strikes to use, this might tell you that going a little further out of the money can be good, because you can see actually that more or less the further out of the money you get, the more profitable it's been. If you want to test side by side a few different symbols, then you just put commas between them. And now it's not going to run a bunch of different deltas. It's only going to run the middle pair here. And same if you click a portfolio. If you want to test a portfolio, you can say, hey, how has this done against the NASDAQ 100? It's just going to run this middle one, because we don't want to run on 100 different stocks, 5 different back tests. That would be pretty confusing. So it just runs the middle one. That's worth thinking about. Okay, this is a powerful tool. There's a lot here, a lot to go over. That's why we do these sessions every week, so we can kind of keep diving in and answering questions. That's a little portfolio back test. I'm going to show you one more little cool feature, and then we'll have about up to 15 minutes for questions if we still have some questions. So right now, this is running the same strategy against the Dow 30, against all of those stocks. You can see it's still working here. The speed for Platinum users is a little faster. So, depends how heavily the machines are being used and stuff. But once this completes, I just want to show you one more little feature. One, if you click on one of these rows, you can still drill down and look at all the individual trades. But I can also say, look, I want to sort this by the average trade percent. So each trade, how much I made on average across these ones. And then say, hey, the Today tab is great, but I looked at my own list of back tests and maybe I tweaked something. Maybe I wasn't looking anymore at this isn't the 40 delta, it's the 45 delta, but maybe you wanted to look at the 20 delta version. So now you can kind of tweak it and customize it to your own liking, and then say, okay, so now I've sorted by the average trade percent, which is a pretty good thing. If you had to choose one thing to sort by, it's a pretty good one for a variety of reasons. But now I could say, hey, any of these things that have more wins than losses, I just want to alert this, especially if it has a lot more wins than losses, especially if there's several trades here, and say, hey, these look like cool strangles to trade. Now that you've selected these, you can click this add alert button at the top, and it's going to notify you in any one of these tickers when the technical conditions are met for any one of these tickers. You can say my own custom strangle top performers. Click add alert here. So I will just note that when you do that, so let's see. So this is the alert that we just set. It sets it individually, the technical conditions individually for each individual ticker. So you'll only get notified for CRM if CRM is met, same with Nike, etc. This link that it sends you is a link to this whole backtest, however. So it's using the same share link as this. So you're going to see the whole backtest. So if you click the share link, it might be a little confusing because you're saying, hey, I'm getting a whole portfolio of stocks. I don't know which one triggered. Just make a note when you look at your email or at your text, it'll say this technical alert triggered in CRM or in Nike or in Bank of America. Then when you pull up the share link, if you want to get reminded of how well it did and you don't want to look at it in this view, if you now change the symbol, all of the other conditions are the same. So this is the exact same backtest. And that way you can check, hey, is it still active on the day? Do I still want this trade, etc. Great. So, there's a lot of power in this tool, a lot more stuff we can go over. I think that was a pretty good kind of overview of the tool. There's cool stuff with custom strategies, so you can kind of create your own. We'll note that if you click one of the trades, that's a custom strategy, and you want to know more details about what it is. So this gives you the name, but if you want to look at the actual positions, you see that the custom strategy is clicked, you click edit, and then you can see all the details up to 4 legs, and you can also create your own custom strategies. We have live help sessions specifically on custom strategies. There's a lot of resources in that Learn tab, but just so that we actually have at least a few minutes for questions, I'll leave it there. And that was a little more in-depth overview of TradeMachine. So thanks for your sticking with us. Cool. Okay, so why was slab included in the 4+ liquidity filter, even though there was a large bid-ask spread and very low volume? Alert was triggered yesterday under bearish bursts. Yeah, so we can look at, if you go to the Learn tab, we can actually look at it. So it's looking across options that are roughly 30 days in the future. We're not looking at volume I know a lot of people think it's either like volume or open interest is really the way that a lot of people think about liquidity. I mean, that shows you the amount of trade activity there is, but a lot of those, if you see 10,000 contracts traded, a lot of times it's someone, a big investor or hedge fund, whatever, calling his broker going down to the trade floor and talking to, floor traders and saying like, hey, we're going to do 10,000 contracts. What price can you guys give me? And a bunch of people come around and they come up with a price to trade it. So that now is going to show huge volume. It's going to show huge open interest. That's different than can I get a good fill? And unless you have a trading account in the many millions and you're putting a large chunk of that into individual trades, almost always, if the market is tight, you're going to get filled on your 10 contracts or 20 contracts or however many you're doing. So for that reason, we pretty much just look at bid-ask spread. Blaine, I don't know the specific spread that you were seeing at the time with slab. So, when you say big, I don't know, what big looks like to you. The thing is for different stocks, so I don't know what the trade price of slab is. Okay, so it's showing 120. So keep in mind that if something is $1 wide for a stock trading at $123, that's still pretty wide. I don't think that would be a 4+, but that's the same as 10 cents wide for a stock that's trading at $12 in terms of how much edge you're giving up relative to how much stock you're controlling. So, 123 is kind of not especially high price stock, but you can keep in mind that as stocks get higher and higher price, it can be a wider market, but still be tight relative to the amount of, of buying power that option is controlling. So these are the rules specifically. So anytime if it's less than 5 cents width, no matter what the stock price is, you get a score of 5. Otherwise, it has to be 0.25%. The actual width has to be 0.25% the stock price. So for a $100 stock, it would be 25 cents wide to give you a 5, and it would be 50 cents wide to give you a 4, and dollar wide to give you a 3, etc. So if you see one that looks funny to you, anytime if you say, hey, the liquidity looks funky to me on this one, absolutely send it in to us. It's a relatively new feature, but everything I've seen so far is it's done a pretty good job, and we actually haven't had that feedback. Generally, the feedback's been like, hey, this is super helpful. Really appreciate it. But we're always open to, your thoughts and feedback. And yeah, so just if you have an example, feel free to take a screenshot and send it to support@cmlviz.com, and we'll happy to take a look. Okay. That would be bullish. I don't exactly know the context for that, Tommy. If you want to put it at the bottom, then I can look at DRM earnings were last night. Okay. Yeah, good to know. So that thing's probably moving a little bit more. Yep. So yeah, that's a good point. So in theory, you wouldn't want to trade this because we say you never trade earnings for CRM. In theory, you'd wait 2 days before and 2 days after to trade something. On the other hand, with that strangle, it's actually probably whipping around a little bit more. So, the fact that it's only 1 day after, that's okay with me, but it's a good point that Max brings up. Hey, Jason, I understand how to calculate the math for a diagonal call exit strategy. Entry times 1.8. If I want to exit at 80% max profit, then the dollar's exit. However, now I'm looking at the spread, the sell-off late put strategy. What is the math to exit 80% gain for the strategy? Given I hope the price will drop and there are 3 legs. Thank you, Judy. Great question. For short strategies, it's a percentage of the credit that you initially take. So if you put on that strategy and let's say your initial credit is $1,000, the goal would be to exit at $1,800, so you can divide that out by the number of contracts, or another way to put it is if you're entering that strategy for $1 per contract, $180 per contract, but 1.8, or if you're entering at 100, then you want to exit at 1.8 per. So yeah, anytime it's a short strategy, then the limit is based off of the credit that you initially take. Yes, okay, that's a good point. So we have a question. Hey, I'm only getting 50 tickers and it's supposed to be 101. Yes, so we're gonna bump up the number of tickers for monthly subscribers. Originally the portfolios feature at all was only for platinum subscribers, and then it was like 25 or 50, and then we're kind of slowly increasing it. We will right now. Platinum subscribers have 200, but we're going to increase for monthly subscribers to 100 or even 101. So, but yeah, that's why it's stopping there. It's because the platinum users have access to a larger portfolio. But that's a good question, and we are in the very near future going to change that to 100, and we actually might change it to 101 and then I think there's 101 symbols, so that so you can do that whole portfolio back test. Selling a 40 delta put and buying a 30 delta put sounds bullish to me. It is bullish because it's a short put spread. I mean, it depends. It's put it this way. It's not bearish. You would not want the stock to go below your short 40 delta, and the 30 delta is your protection. So yeah, it's not a bearish bet. It's a not bearish bet specifically. Stock doesn't have to go up, but you don't want it to go down a lot. Okay, so Tommy's saying I didn't like the amount of contracts that I saw in Slap. Yeah, Tommy, that's a very normal way to think about liquidity. The width of the market. There's stocks that are traded very tight. So for instance, if there's a ETF that tracks a futures market, for instance, even if the volume on that is very low, because people can almost instantly cancel out their risk because there's a very similar position they can take to cancel out that risk. Or if someone had an SPY clone that basically tracked the SPY, but it just wasn't called SPY, it was the Vanguard SPY or whatever it was, even if the contracts were even if there was very, very few open interest or volume, they could be extremely tight. They could be penny wide because the way that these arbitrage firms work is they can lay off that risk almost instantaneously. The volume and open interest can be quite deceiving for a lot of reasons. I mean, having a bunch of volume is great, but you could have a bunch of volume in very wide markets and you're still not going to get great fills. So the liquidity isn't meant to say, hey, is there a lot of order flow in this? And I could see in the future us to potentially have a technical trigger. Hey, the open interest increased across the board in the calls. Like the call open interest increased. Like that would be cool and great technical indicator. It looks like, you never know what the person's stock position is. So they could be short stock and long calls, But as a technical indicator, I can see looking at open interest and potentially even volume if you're seeing if you're kind of trying to follow the tail of the tape with like a bunch of out of the money calls that got purchased or something like that. So I think in the future, we could have some really cool technical indicators built around that. In terms of, am I going to get a good fill? In terms of just that sense of liquidity, the market width is going to, unless you're trading 100 lots, almost all the time, if something's a nickel wide, you're going to get your fill at a nickel wide. And if it takes if there's only, 3 on the offer, you get to the first 3, chances are 2 minutes later, you're going to get your next 7 if you're doing a 10 lot. So we're looking at liquidity strictly from a market width perspective. Okay. Tiz, where are we limited on the number of ticker sites? So on the portfolios for monthly users right now, so for platinum annual users, you get up to 200. For monthly users, this just shows 50. So you could actually look at this list. You can copy it, and you could do create. You could say new. So you could say QQQ first 50. Add those in. Create a new portfolio, and then test each one individually. You can download the trades and put them in a spreadsheet, and look at all the data that way. So you can break down the portfolios. So you can test the entire market. You can test everything in the Russell 3000 if you want to. It's just how big of a batch do we let go at once? And for annual users right now, it's 200. Monthly users might be seeing 50, but we will increase that to 100, and I think we can do that soon for you. With everything being nearly equal, comparing an AI or a non-AI trade on the Today tab, do you prefer taking the AI versus a trade that doesn't have the AI, or doesn't it make a difference to you? I do prefer the AI trades. They don't occur as often or that often, but when we've looked at the historical performance across a wide range of factors, that the AI trades are pretty phenomenal. So much so, there's been a little bit of internal discussion if there should be a separate effort made around, just leveraging that AI, because it's pretty powerful. On the Learn tab, I think there's a whole video on AI. I think it's a remarkable finding in finance, skew, and kurtosis.
That's probably the transcript.
Okay.
But yes.
I do tend to get the transcript a lot so sometimes if you want to read it, you'll see transcript. If you want to watch it, it's the one that doesn't say transcript. Yeah. So here's the breakdown of all the research. Really cool, really powerful. And I do prefer the AI ones. I trade those whenever I can. Will you be graphing skew and kurtosis soon? Yeah, it's definitely on the development list, Paul. I don't have a specific date. We're trying to get the applied volatility and historical volatility out right away. We're also going to be doing some kind of just usability updates in a couple places in the product. But yeah, that's on the roadmap for sure. Great. Okay, well, we just went up a couple minutes over an hour. I did want to mention, when you go to community, first thing it'll do is just ask you to be nice. And then if you have CML Pro, which is a really awesome stock investment, platform that's outperformed the market, if you have both, you'll choose between them for where you're posting. So this is an awesome community. It's a great place to share ideas. It's a great place to learn. If you click show replies, you can see all the details here. And we have a former options market maker, floor market maker, who's Max. He goes by Chat Uncle Pops right here. He's a really awesome resource. He's super knowledgeable. He knows the product really well. He's there to help answer questions and just to make your whole experience a great place. He's kind of an ambassador to the product. So we thank him for his contribution. And we thank you for being members of TradeMachine. Thanks for spending your hour with me, and I hope you found some things here helpful, and we'll be doing this again next week. And